PPG Industries, one of the biggest names in the paint and coatings world, just dropped their latest earnings report. And let me tell you, it's a fascinating story. You've got incredible strength on one side and some pretty major headwinds on the other. It really is a balancing act, and we're going to break it all down.
So let's just get right to the heart of it. In the final quarter of 2025, PPG actually brought in more money than Wall Street thought they would. That sounds great, right? But here's the catch. Their profit, the actual earnings per share, came in a little light. So they sold more stuff, but they were less profitable than everyone hoped. How does that even happen? Well, that's the big puzzle we're going to put together today.
Here's our game plan. First, we'll unpack that mixed performance. Then we'll zero in on their absolute star performer, the aerospace division. After that, we got to look at what's dragging them down, this problem in the automotive refinish market. Then, things get really interesting when we uncover their secret weapon for the future, a big bet on AI. And finally, we'll see how this all sets up their outlook for 2026, which they're calling a tale of two halves. All right, first up, let's unpack these numbers. Time to see exactly what went right and, what went wrong. Okay, so that revenue number was definitely a bright spot. They pulled in $3.91 billion, which was nicely ahead of what analysts were predicting. But the earnings per share, or EPS, that tells a totally different story. It landed at $1.51, just missing the $1.57 target. The big takeaway here is that even with really solid sales, higher costs, and a slowdown in one super profitable area just ate away at their bottom line. Now, let's talk about the first major force in this balancing act, PPG's incredible aerospace business. This division isn't just growing, it is absolutely firing on all cylinders. All through 2025, PPG's aerospace sales shot up by double digits. And we're not talking about a one-time blip. This is sustained, powerful growth in a sector that's just booming right now. This has been a massive tailwind for the entire company. And PPG is absolutely putting their money where their mouth is. They are pumping a huge $380 million into a brand new factory just to keep up with all the orders. Think about that. They're selling so much they can't make it fast enough. That's a great problem to have, right? And this isn't some short-term patch. It's a huge long-term bet on the future of aerospace. So what's their secret sauce in aerospace? Well, for one, it's not just about paint for planes. They're also a huge player in high-tech sealants, adhesives, and even things like cockpit windows. Plus, they're in everything, commercial, military, and private planes, which gives them a ton of stability. But here's the kicker, it's a really profitable, high-margin business. They're so confident, they're already predicting more strong growth heading into 2026. Okay, now for the other side of the scale. While aerospace is just soaring, the automotive refinish business, that's the paint used for car repairs, is hitting the brakes hard, and it's creating a major drag on the whole company. The core of this problem is a term called distributor destocking. I know it sounds super technical, but the idea is actually really simple. Just imagine you're a distributor selling paint to auto body shops. If you get a sense that fewer cars are going to need repairs soon, you're not going to order a bunch of new paint, right? You're just going to sell off the cans you already have in your warehouse. That's destocking. And for PPG, it means a temporary but very painful dip in their sales. And hey, don't just take my word for it. PPG's own CEO, Tim Knavish, basically said that this destocking problem is so big that it overwhelms the positivity from their other growing businesses. And why is it such a huge deal? Because just like aerospace, this is a very high profit part of their company. So when sales drop here, it really, really hurts that bottom line. So what started this whole domino effect? Well, it all kicked off with a drop in insurance claims for car accidents. Fewer claims meant fewer repairs, which meant body shops didn't need as much paint. The distributors saw this trend coming and slammed the brakes on their orders from PPG so they wouldn't get stuck with a bunch of inventory they couldn't sell. It's a perfect storm. But this story isn't just about the old school market. No, PPG is playing the long game with a high-tech wild card up their sleeve, artificial intelligence. So how exactly is a paint company using AI? This part is pretty wild. First, they took over 100 years of their secret paint formulas and digitized all of it, creating this massive data goldmine. Then, they basically let an AI loose on all that data to invent brand new, better formulas or to make existing ones cheaper and more effective. And the end result? They can bring smarter, more efficient products to the market way faster than their competitors. And this isn't just some sci-fi concept, it's really happening. They've already launched their first product that was completely formulated by AI, a clear coat for that same auto refinish market. On top of that, they've used AI to improve about 50 of their existing products. PPG's leadership is convinced this is their edge, a key advantage that will set them apart for years to come.
Okay, so you've got these incredibly powerful forces pulling in opposite directions. You've got booming aerospace, a struggling auto repair market, and this game-changing AI strategy. So what on earth does all this mean for the year ahead? Let's check out PPG's forecast for 2026.
Their forecast for 2026 is truly a tale of two halves. They're telling us to expect a pretty tough, slow start to the year, with earnings growth looking pretty flat. But they're really optimistic that those challenges are going to fade away in the second half, letting their growth engines take over and deliver a really strong finish to the year.
The most important thing to get here is that PPG's leadership sees this whole automotive refinish problem as a temporary headache, not a long-term disease. They're already seeing signs that things are getting back to normal, like accident claims picking up again. They're betting that those distributors will start placing big orders again in the second half of 2026, turning this major headwind into a tailwind. So what's going to fuel that big second half comeback? Well, it's a mix of things. They're counting on that continued strong growth from aerospace, a rebound in their architectural paint business down in Mexico, about $100 million in new business from gaining market share in industrial coatings, and another $50 million in good old-fashioned cost savings. So it really all comes down to this. PPG is on a high wire, trying to balance this significant but hopefully temporary problem with some seriously powerful long-term growth drivers. The big question for 2026 is, will their massive bet on aerospace and their cutting-edge AI strategy be enough to finally tip the scales for good? I guess we'll just have to wait and see.